Today, I want to ask you three questions. And the first one is especially delicate. Don't you think we're witnessing a silent drama? A silent drama that's happening right now in the United States. And that will soon spread to the rest of the world? That's our first question. The second one, has the precious metals bubble already burst? And the third one, what could Jerome Powell say today, after the FOMC meeting, that could derail the strong uptrend in the stock markets? Stay with me until the end, because all three questions are connected, and they tell the story of how power, money, and technology are being redefined. You've seen it. The S&P 500 has already passed 6,900 points. It's marking new all-time highs almost every single day. The Nasdaq 100 too. But here's something curious. This rally is being carried by just a handful of stocks. Yesterday, out of the 500 companies in the S&P, 398 closed in red. That's almost 80% of the index losing value. And yet, the index still hit a record high. What's going on here? You know it perfectly well. A small group of tech giants are the real engine behind the markets. They're the ones setting the direction. They're the companies we must be aligned with, because they are the ones governing the future. And this is where the silent drama begins. All across the US, big tech companies are launching a massive wave of layoffs. We're talking about 192,000 jobs being cut. Amazon is letting go 30,000 people. Intel, another 20,000. What's happening? These people are being replaced by artificial intelligence. Because once one company invests heavily in AI, every competitor is forced to follow or disappear. At the same time, we're facing a shortage of plumbers, painters, and skilled electricians. And here lies the real drama. The workers being pushed out by AI won't easily find new jobs. That's why some analysts are saying the US economy could enter a recession. But in my opinion, no, it won't. Some sectors may weaken, yes, but others, especially those tied to AI, chips, and data centers, will continue growing thanks to higher productivity. So no, I don't see a global recession in the US. Not while there's such massive investment in artificial intelligence, in chips, in data infrastructure, and in advanced analytics. Now, let's take this one step further. Don't you think that with AI, the United States is building an impenetrable moat? Don't you think NVIDIA is becoming the real arsenal of the US government? Because AI isn't just technology anymore. It's the foundation of national power. And NVIDIA is right at the center of it. Let's talk about NVIDIA. Right now, NVIDIA isn't just a company. It's becoming the arsenal of the United States government. Think about it. NVIDIA is providing 7 artificial intelligence supercomputers to the US Department of Energy. 7. That's not a business deal. That's a strategic alliance. And it doesn't stop there. NVIDIA has signed a $100 billion agreement with Nokia to help build the backbone of 6G networks. Not 5G, 6G, the next frontier in communication technology. It has also reached supply chain agreements with Samsung and Hyundai, laying the foundation for a global AI infrastructure. So what does this mean? NVIDIA isn't just selling chips anymore. It's integrating advanced computing into America's security and defense systems. This is not business. This is strategy. We're witnessing a revolution. And NVIDIA is at the heart of it. AI is now the new energy of global power. Whoever controls the chips controls the algorithms. Whoever controls the algorithms controls the world. So when people ask me, where could NVIDIA's stock go from here? I tell them this. If the company is becoming part of the national security infrastructure, its potential is practically unlimited. Its market cap could easily continue to grow because it's not competing in a sector anymore. It's building the system itself. And as investors, we must align ourselves with that infrastructure. If NVIDIA is building the digital defense network of the US, then standing against it is like betting against history. This is why I say, NVIDIA is no longer a company. It's a weapon of computation, of innovation, and of dominance. But this comes with consequences, massive ones, because the rest of the world, military strategists, politicians, economists, are realizing something terrifying. They don't know how to compete. They don't even know where to invest. To keep up with this level of integration between AI and defense, that's why I call it a silent revolution, because it's happening faster than anyone can adapt to. And as AI accelerates, the geopolitical map is being redrawn, not by armies or treaties, but by code and silicon. This is the new arsenal, not missiles, not aircraft carriers, algorithms. And NVIDIA builds them. So yes, this is the drama. While the rest of the world still argues about interest rates, America is quietly building digital dominance. But the story doesn't end here. Because while AI is creating new empires, the old world, gold, silver, and precious metals, is showing cracks. And that brings us to our second question. Has the precious metals bubble already burst? Recently, I was reading an analysis by Robin Brooks, chief economist at the Institute of International Finance. And honestly, his view surprised me. He says that gold prices are in a bubble, that they've risen way beyond fundamentals, and that this surge can't be justified by real demand. But I completely disagree. Let's take a closer look. When people talk about a bubble, they often forget one key thing. Context. Gold is not rising in a vacuum. It's rising because trust in fiat currencies is falling. The entire world is witnessing a slow erosion of confidence in paper money, and that's what drives capital into tangible assets like gold and silver. Now, let's add another point. The real price of gold, when adjusted for inflation, is still far below its 1980 peak. So if anything, this isn't a bubble. It's a late awakening. Also, look at where the demand is coming from. It's not Western investors speculating. It's central banks. Countries like China, India, and Russia have been accumulating record amounts of gold. And they're not buying it to make jewelry. They're buying it to diversify away from the dollar. This is part of the same global transformation we've been talking about. While the US builds its digital empire with NVIDIA and AI, other nations are building their monetary independence with gold. So again, not a bubble, a strategy. Now, there's something interesting happening here. The rotation between gold and Bitcoin. For the first time in history, these two assets are playing complementary roles. Gold represents the past of sound money. Bitcoin represents the future of scarcity. Some investors are moving part of their gold exposure into Bitcoin ETFs. But they're not abandoning gold. They're diversifying their escape routes from fiat money. That's why gold has stabilized. While Bitcoin continues to rise, they're not enemies. They're allies against monetary degradation. So when people say, gold is in a bubble, I just smile. Because the real bubble isn't in gold or Bitcoin. The real bubble is in fiat money. We've been inflating that bubble for decades, through debt, deficits, and unlimited liquidity. So no, gold hasn't peaked. It's just reacting to the truth. And the truth is that the monetary system, as we know it, is quietly collapsing under its own weight. And now we come to the third question. What could Jerome Powell say today, after the FOMC meeting, that could actually stop the market's bullish momentum? Honestly, nothing. At this stage, there's nothing he can say that would change the direction of the markets. The Fed has already lost control of the narrative. The markets no longer believe in the threat of tightening. They believe in one thing, liquidity. Powell can raise rates. He can warn about inflation. He can even talk tough about financial stability. But the market knows how this ends. Every time the Fed tries to sound hawkish, liquidity finds another way in. Through the Treasury, through fiscal stimulus, through AI-driven productivity that inflates asset prices. That's why the S&P keeps rising even when 400 of its components are falling. Because liquidity isn't leaving the market. It's just concentrating. And where is it going? To AI, semiconductors, and infrastructure. The core of the new economic order. Powell cannot tell the truth. That the U.S. government can't afford high interest rates for too long. The interest on the debt alone is now one of the largest budget items in the United States. So the only option left is to keep the illusion going. To monetize the debt silently. They'll keep pretending they're fighting inflation, while quietly feeding the same liquidity that keeps the markets alive. That's why I say the Fed is trapped. They can't tighten too much without crashing the system. And they can't ease too much without admitting defeat. So they'll do what they always do. Talk tough, act soft, and hope no one notices. Meanwhile, the real engine of this market isn't monetary policy. It's technological dominance. NVIDIA, the AI sector, and the data economy are driving productivity, margins, and valuation multiples higher. That's the new cycle. From money printing to code printing, the US no longer needs to flood the world with dollars when it can flood it with algorithms. And that's why the markets are unstoppable for now. So let me sum it up. Artificial intelligence isn't in a bubble, it's booming. NVIDIA has become the digital arsenal of the US government. Gold and Bitcoin aren't bubbles. They're reactions to a decaying fiat system. And Jerome Powell? He's no longer leading the markets. The markets are leading him. That's the silent drama I mentioned at the beginning. The US is not in recession. It's transforming. The global order is shifting from energy to data, from gold to algorithms, from interest rates to liquidity cycles. And if you ask me what comes next, I'll tell you this. We're entering the age where financial power equals computational power. And in that world, NVIDIA isn't just a company. It's the cornerstone of empire. If you enjoy this kind of macro analysis, clear, independent, and free from headlines, make sure to subscribe and like this video, because understanding the system is the first step to protecting yourself from it.